Ladies and gentlemen, good day and welcome to Allcargo Terminals Limited Q3 and 9 months FY26 earnings conference call. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shreyas Saman from Stellar IR Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us today. We have with us today the senior management team of Allcargo Terminals Limited, Mr. Suresh Kumar, Managing Director, Mr. Preetham Vatta, Chief Financial Officer, and Mr. Sanjay Punjabi, Investor Relations, who will represent Allcargo Terminals Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and 9-month ended 31st December 2025, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon the company's beliefs, opinions, and expectations as of today. These statements are not a guarantee of the company's future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect developments that occur after the statement is made. I now hand over the conference to Mr. Suresh Kumar, sir. Thank you, and over to you, sir.
Thank you, Shreyas. Good afternoon to everyone, and a warm welcome to the Allcargo Terminals Limited Quarter 3 and 9 months FY26 earnings call. We have uploaded the results, press release, and presentation on the stock exchanges and the company's website. I hope you have had an opportunity to go through the same. To begin with, a brief outlook on global trends. The IMF expects global growth to remain resilient at 3.3% in 2026 and 3.2% in 2027. This is broadly in line with the recent years and reflects a modest upward revision for 2026. Growth is supported by technology-led investment, including artificial intelligence investments, continued fiscal and monetary support, accommodative financial conditions, and private sector resilience, which are offsetting some of the headwinds from shifting trade policies. Global inflation is easing and is projected to decline to about 3.4% by 2027. Coming closer to home, India, in the recently announced Union Budget, it highlights the government's focus on public investment, raising FY27 capital expenditure to rupees 12.2 lakh crores from rupees 11.2 lakh crore in FY26. This targets infrastructure across roads, railways, ports, logistics parks, and multimodal connectivity, enabling and supporting manufacturing, exports, and MSMEs. Large-scale spending is expected to enhance freight movement, improve logistics efficiency, reduce supply chain costs, and create sustained opportunities for infrastructure-linked businesses. Additionally, you would have seen a 10,000 crore scheme to promote domestic container manufacturing, which was announced, aimed at strengthening India's logistics ecosystem, reducing import dependence, and supporting higher container availability and trade growth. Coming to Allcargo Terminals, Q3 FY26 was a quarter where Allcargo Terminals witnessed significant growth. Volumes for the quarter stood at 1.76 lakh TEUs, reflecting a growth of 18% year-on-year. The volume growth is a clear reflection of the early benefits from our 3-year strategic plan, in which we have added capacity at JNPT in Q4 FY26 and earlier in the year, renewed contract with CWC in Mundra. Revenue grew by 17% during the same period, while profit after tax increased by 28%, underscoring the operating leverage that we have in our business. Our deep customer equity is enabling us to leverage capacity expansion, grow volumes, and strengthen profitability. Continuing on the 3-year plan, with the capacity augmentation, we have recently been awarded a 10-year extension of our speedy JNPT facility. We plan to upgrade the facility with assistance from JNPA, and there is a potential for annual capacity enhancement in this facility by up to 60,000 TEUs. We remain confident about the long-term growth prospects of CFS and ICD operations in India, especially at a time when global trade dynamics are being reset. Recent trade agreements signed by India with the European Union and the United States are expected to provide a meaningful boost to manufacturing activity and India's EXIM trade. On that note, I wish to hand over the call to our CFO, Mr. Preetham Vartak.
Thank you, Suresh. Good afternoon, everyone. Welcome to our Q3 and 9 months FY26 earnings calls. I will now present the key highlights of the financial results for the third quarter and the 9 months ended FY26. Total volume handled in Q3 FY26 was 1,76,560 TEUs, up by 18% over Q3 FY25 and 5% over Q2 FY26. For 9 months FY26, total volume stood at 4,96,296 TEUs, up 7% over 9 months FY25. Revenue for Q3 FY26 was rupees 218 crores, up 17% over Q3 FY25 and 5% over Q2 FY26. For 9 months FY26, revenue stood at rupees 613 crores, up 7% over 9 months FY25. EBITDA excluding other income for Q3 FY26 was rupees 43 crores, up 31% over Q3 FY25 and 6% over Q2 FY26, implying an EBITDA per TEU of rupees 2,435. For 9 months FY26, EBITDA stood at rupees 118 crores, up by 24% over 9 months FY25. Net profit for Q3 FY26 was rupees 15 crores, up by 28% over Q3 FY25 and up by 33% over Q2 FY26. For 9 months FY26, net profit stood at rupees 35 crores, up by 9% over 9 months FY25. I would like to highlight here that we have repaid our borrowings and the company will be debt-free in Q4 FY26. As on date, we have repaid that balance loan and we stand debt-free as of today. With this, I would like to open the floor for the question and answer session.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question to the management, please press star and 1. Our first question comes from the line of Vikram Suryavanshi with Phillip Capital. Please go ahead.
Good afternoon, sir. I hope I'm audible.
Yes, you are, Vikram.
Okay, thank you. So you've given volume numbers overall, but obviously you can, if you are not comfortable, you can give the actual number at the ICD. But directionally, are we seeing good growth even at ICD also, or similar to what we are looking at CFS?
Hello. Thank you, Vikram, for the question. In terms of directional growth in the ICD, it is similar growth that we have seen.
Okay. And if you look at JNPT particularly, or even at other location, customers trying to facilitate the trade with a lot of automation and risk management system. So will particularly my question regarding the speedy CFS opportunity, will that create more opportunity for importers to take a cargo under basically for faster clearance without taking it to the CFAs? And can that impact, or how do you see that panning out? What improvement in the processes will it impact this particularly opportunities for Speedy?
So that's a good question, and I think we have spoken about this in earlier calls. Any improvement in technology which makes life simpler for the customer is obviously very welcome, because it only brings down logistics costs for everybody concerned, makes the whole trade EXIM cycle move faster. CFSs and ICD exist because there is a need for customers to store the containers at strategic locations for a certain amount of time. And we are seeing that even when there is an overall increase in volume and when DPD volumes pick up, there are a set of customers, there are a group of customers, there are a set of commodities which definitely end up coming to the CFSs for the reasons that are value adding for the customer. So that trend continues. And for Speedy, once we have the renewal and once we are able to do the necessary infrastructure upgrade, as you would know, it's a 20-year-old facility. Now we have got another 10-year extension. The facility will be enhanced with regard to some of the technology that we have in the other all-cargo facilities. It will only make the whole process better for customers. Speedy also has the unique advantage of being the CFS which is closest to the port, and therefore the most attractive location for over-dimension cargo and the amount of reefer work that we do. So we believe that the extension is a very good one for us and will help us in the plans that we have chalked ahead.
And how much you would be spending on Speedy upgradation and capacity increase?
So in terms of the capex requirement, we are in discussion with JNPT to finalize the work. The work which needs to be done there involves some technology deployment. There is also yard and warehouse repair work which needs to be done. We received the extension in the last week of December. We are in the process of working out the estimated investment along with JNPT. Maybe in the next investor call, I think we will have clarity about this, but the work is expected to start maybe in another 3 to 4 weeks. We are in the final stages of getting the estimates done, and we are in discussion with JNPT.
Got it. And I think just last question, what would be broadly proportion of DPD at JNPT port currently, and are we seeing that is like almost like a mature now?
So it's mature. This number has been in the high 70s for the past many quarters, and it is in that range. It remains at that. So it is a stable kind of a number. Some months it gets to about 78, 79. Some months it comes down a little. If my memory is right, in the month of December, the DPD volumes marginally dipped. But it is, as you rightly mentioned, matured, and it's in the range of about 75 to around 80%.
Got it. Yeah. Thank you very much.
Thank you. The next question comes from the line of Darshan Javeri with Crown Capital. Please go ahead. Hello. Good evening, team. Thank you so much for taking my question. Firstly, congratulations on a good set of numbers, sir. I'm a bit new to the company, so pardon my ignorance. I just saw that we've done an expansion in JNPT, right? So for FY27, we can expect the full kick-in of that, right, sir?
Yeah. So thank you, Darshan, for asking the question, and thank you for covering this sector. And then your question about JNPT is about the capacity that we added there. So the capacity addition that we did was in the month of August. We added about 170,000 additional TEU handling capacity in JNPT. So for the first 4-5 months of the year, we didn't have that capacity. And when you build the capacity, it takes a little time to fill in that capacity. So this whole capacity, as you rightly mentioned, will come into play for us in the next financial year.
So with that additional capacity, which I think is nearly, our quarter's volume, so what can the growth be in FY27, sir?
Yeah. So I'll just take a couple of data points here. So in the first quarter of this year, including our Dadri facility, we used to do an average of about 56,000 TEUs. That is what we were doing in Q1 of this financial year. Q3, the quarter which just ended, our average monthly volumes grew to about 64,000 TEUs. So this is about 7.5 to 8,000 increase in TEUs, out of which about 3,500 came in from the JNPA facility. We had also got an extension in Mundra in the beginning of the calendar year. There also, compared to Q1, we have been able to grow our volumes. That also has contributed to another 3 to 3,500. So both the locations where we have added capacity, we have seen growth in volume. So out of the 8,000, about 80% of that volume growth has come in from JNPA and Mundra. And if you were to look at what's happened in the industry and the overall growth, JNPA has been one of the faster growing ports in the country. Overall volumes have increased somewhere in the range of about 6 to 7%. We have outpaced that marginally, and we expect this to strengthen with the trajectory that we are having now. So we currently this year are growing at about 7%. We expect to add at least another 1 or 2 percentage points to this growth next year.
Okay, so we can be around 8 to 9% volume growth in FY27. So.
Yeah.
Yeah. So, and so just wanted to know, like, once the additional volumes, kick in, what kind of operating leverage, we can get? Because as the volumes have increased, our, EBITDA margin has also been increasing, right? So, that journey will keep on continuing, right? How do we see the EBITDA margin? Because I think it's around the highest in the last few years also, maybe, like right now in Q3. So how do we see that, sir, going ahead?
Yeah, I'll request Preetham to answer this.
So you're right. I think last few quarters, as we have been able to push the volumes up, the operating leverage is coming into play here. In few quarters back, we were very close to 2,000 or looking to break the 2,000 per TEU is the KPI which we basically track every month on month, EBITDA per TEU. It used to be around 1,800, 1,900. Then we crossed 2,000 and now we are very close to 2,500. So there has been a substantial operating leverage which has come into picture. Initially, when we added capacity, we were started paying the rent. However, the volume impact has kicked in last couple of quarters. As there are still some capacity which is available, especially in JNPT and also in Speedy, the capacity would get added once the upgradation is done. We expect that this upward trend which is there in EBITDA per TEU or would continue because the operation leverage would be there and would come into picture. So just to answer your question, yes, the operation leverage has come into play here. We have been able to push our EBITDA per TEU upwards, and as we do the better utilization of our capacity which has been added, this upward trend we expect it to continue.
Oh, okay, that's great. So even if it's not a very significant uptick, but at least the new normal of, around 2,500 that you're saying or 2,400, that is something that we can sustain for sure, right? Because that's enough to do, right, sir? That's a fair way to look at it, sir?
Yes.
Yeah, okay. As I just wanted to know, like, these been very turbulent times, especially the last 12 months, and, we've navigated it decently well. So now when, all this, macro risks has kind of reduced, how do we see, like, the next 2 years? Because if everything's, working at a normal, what do we, look at it? What are our internal estimates of the macro environment, as well as like how will our company also, look to accelerate in terms of growth? So could you just, help us with that, sir?
Again, if you were to look at what's happened in the macro environment and what's happened in the Indian economy has managed to be a strong contributor to what's happening in the world. And in terms of GDP growth and various other macro indices, this could only further strengthen as we go ahead. Port volumes in the country have grown at about 7% as of now. A couple of ports have done better, but overall that's been the kind of volume growth. And if we were to look at for the coming years, and even as the 3-year plan discussions that we are having, we have estimated market to grow at about anywhere between 6 to 8%. So that's the range that we are talking about for market. And our ambition and aspiration is to grow faster than the market. and the capacity additions that we have planned and the capacity additions that we have already completed. When we began this financial year, we began with a capacity of about 8.3 lakh TEUs annually. During the course of the year, with the expansions, we are now at about 10 lakh TEUs annually, and there are further steps which are planned. So our primary focus is to ensure that the capacity utilization that we have gets to about 85-86%. So that's a good level of capacity utilization with laden containers. When we talk about capacity utilization, normally we use the laden containers. On top of that, there is empty containers which move in and out of the CFSs. So 85% laden capacity utilization would mean that the CFSs are virtually full, including the laden, including the empty containers. So our estimate is market should grow anywhere between 6 to 8%. We will do all that we can, and then with the support of our customers and the equity of the brand, we expect to grow a shade better than how much the market grows, and that's what we spoke about a little earlier. This year we grow at about 7. We expect at least 1 to 2 basis point improvement in that growth going into next year.
Okay, fair enough. Yeah, that's it from my side. So thank you so much. All the best. Thank you. The next question comes from the line of Kiran Gadge with Nightstone Capital Management. Please go ahead.
Hello. Hi. Good evening. So has dedicated freight corridor network been connected to JNPT port?
Dedicated freight corridor.
Not yet, yeah. It's not yet, yeah.
Okay. And what sort of volume uptake can we see once it is connected?
So we have not really done a estimate around it, and the point which I made in response to Darshan's earlier question is our intention is that the market grows at a certain pace. We would like to grow faster than the market. We have built capacity, and we believe an 85% capacity utilization is the growth that we need to get into. And I think there is enough containers in the market for us to achieve that.
Okay. Yes. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Nilesh Sharma with Anantnath Skycon Private Limited. Please go ahead.
Hello. Thank you so much, sir. Sir, last year we have handled 6.8 lakhs TEU, and in this quarter we have handled 1.76. So we will reach around 7 lakhs. So may I know the capacity utilization percentage that we can expect for this year?
Yeah, thank you. Thank you, Nilesh, for that question. This year, most part of the year, we were having a capacity of around 8.3 lakh TEUs till about September. Post the expansion that we have had in JNPA, our capacity has increased to about 10. So you can weighted average for the year, you could consider our capacity to be in the range of about 9 to 9.2 lakh TEUs for the year. And then in that, if we were to do around 7, that's the capacity utilization that we have of laden containers. And just as I was answering the earlier question from Kiran and Darshan, when we talk about capacity utilization, we also need to factor in laden plus empty. And if you were to look at it on a monthly basis, we handle close to 35,000 empty containers also in the facilities that we handle.
Okay.
Which we don't add in the laden container volume that we report.
Okay. And sir, how much EBITDA that we can expect in coming 2-3 years per container, which was around 2,300 last year?
So I think Preetham answered this in terms of the earlier question. We have seen a steady uptick in our EBITDA per TEU over the last 6 to 7 quarters, which is a reflection of operational efficiency, the kind of work that we have done on the cost side, holding revenue where it is in a market in which there is always a lot of pressure. And with the capacity addition, we are now starting to get operational leverage. And we have now come to an EBITDA per TEU in the range of around 2,400. We expect our EBITDA to be around this region because we also need to remain competitive in terms of pricing. So we expect our EBITDA to remain at this level. And whatever operation leverage which can happen, that can add a few percentage to the current level of EBITDA that we are having. So we would be happy if we are able to hold our EBITDA at the current levels, and if there are opportunities in terms of operational leverage, more capacity as we build in further, that will flow into EBITDA.
Okay. And sir, what percentage of revenue that we can expect from dedicated freight corridor expansion?
So again, I was trying to answer this in the earlier question. We have not separately looked at dedicated freight corridor. The way in which we approach the market is there is a certain capacity that we have built in. There is a rate in which the markets will grow. Then the cargo gets into DPD cargo and non-DPD cargo and DPD CFS cargo. From that, a certain share of cargo is what we target, and that will deliver us the revenue and EBITDA goals that we have planned ahead.
Okay. The last question, any planning to raise the debt for capacity expansion? Because in your capacity expansion in today's presentation, target is 13 lakhs TEU till 2030. So any planning to raise the fund?
So I will answer the initial portion, and then I'll hand it over to Preetham. So the 13 lakh TEU that we are talking about is a combination of the present capacity that we are up at about 10 lakh. We started the year at 8.3. The expansion till now has taken us to 10. There are a couple of projects that are lined up, in which there is the most important project for us in the future years, in the coming years, is the Farrukhnagar ICD project, which is estimated to go live in 2027, April-May timeframe. That will add another 1.5 lakh capacity. Plus, there is the search for adding another facility in Chennai. So these are the key projects that we have in terms of adding capacity. For this funding, what is required, Preetham will take you through.
In our investors' presentations also, in our investor meet presentation, we have mentioned that for all these expansions which we are looking at by 2030, we would be investing capex upwards of in the range of 400 crores. The primary sources of funds identified for these investments is number one is equity. Recently we issued a made right issue which was fully subscribed. 80 crore was the quantum of right issue. That we also made allotment of warrants to the promoters and promoters group. That gave us access to 40 crores of equity, overall 120 crore by way of equity. We do have existing cash reserves in the tune of 30 crores, so that would also be used for the future expansion. Also, the existing business generate very strong or continue to generate very strong cash flow in the range of 100 crores every year, and that would also be deployed for expansion projects. Because of these identified sources, the dependency on borrowings, external borrowings, would be minimal. So we expect that we would be borrowing somewhere in the range of 150 crores based on the present estimate. So we will try and limit our borrowings to that extent. So the primary source of funding for this project would be equity and internal accruals, and the gap would be bridged by way of external borrowing.
Okay, great. Great. Thank you so much, and wishing you all the very best for the future.
Thank you. Thank you very much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question comes from the line of Aryan Bhatia with Inved Research. Please go ahead.
Thank you. Thank you for the opportunity, sir. My first question, I'm new to the company. I have a basic question. My first question is, what is the incremental benefit do terminals get having a CTO license as compared to us? Because we don't have a CTO license, right? So I just wanted to know the EBITDA per TEU, we get 2,400. What is the incremental TEU they get due to having the CTO license, that is a container train operation license?
Thank you. Thank you, Mr. Bhatia, for the question. So you're talking about the rail connectivity and what is the likely additional EBITDA that can happen out of that. So is that your question, if I understand you correctly?
Yes, sir. Yes, sir.
Okay. So as of now, if you were to look at the operations that we have 7 facilities in the country, out of which 6 are CFSs and 1 is ICD. The ICD is in Dadri, where we have a tie-up with Concor, and the rail operations are completely handled by Concor. Our first rail-connected ICD facility, which is the Farrukhnagar facility, is estimated to go live in the month of April. So we have a certain estimate as to what the economics would be for that facility. I think it is a little too early for us to talk about it at this stage, but at the right time, in a future right time, I think we will be able to respond to with an estimate for what are we planning at Farrukhnagar. But it suffices to say that if you have rail connectivity, obviously it's another service that you're giving the customers, and therefore the EBITDA that you get for handling the cargo, including the CFS plus the rail, will be significantly better than what you do by only handling CFS. Some of our peers in the industry, listed peers, if you were to look at their numbers, it clearly shows the EBITDA per TEU would be at a different level than the EBITDA per TEU of a CFS heavy business like ours.
So I will just like to add here. So currently in our CFS, our operations which are CFS dominated, we handle transportation from port to CFS, which is like certain portion of our overall revenue of 12,000 rupees per TEU. However, when you have CTO license, you have access to the rail revenue as well, wherein the cargo is transported by way of rail from port to the hinterland ICD. Just to give you an idea in terms of revenue earned for say Mundra to say north ICD transportation could be in the range of 40 to 45,000 per TEU. So currently, as our business is CFS dominated, we are handling only port to CFS transportation. Whenever we operate an ICD where we have rail license, this revenue will also become part of our portfolio with a significantly higher revenue per TEU.
Got it, sir. Thanks. And my second question is like, are we looking to bid for some new terminals, specifically the Gati Shakti terminal? And just wanted to understand like, what is the difference between like the business model of the Gati Shakti terminals and the traditional CFS or ICD terminals?
So in terms of Gati Shakti terminals, this is a program announced by the government, and these are on the Indian Railway facility. You have identified areas where a certain amount of railway land is allocated for on a PPP basis to develop passenger freight terminals. We have identified a few stations across the country. Whenever there are opportunities which come up there, it follows a bidding process. We will participate in them. But ahead of that, we have identified our own PFT terminal to come up in Farrukhnagar, and that is a Farrukhnagar project that we spoke about, which we are estimating to go live by April 27.
Got it. Thank you, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, please press star and 1. The next question comes from the line of Sanskar Raja, an individual investor. Please go ahead.
Hello. Thank you for this opportunity. Am I audible?
Yes, you're audible. Please go ahead.
Yes, sir. My first question would be, sir, as we can see, the financial performance this quarter has been very strong. Can you elaborate more on the key drivers of operating leverage that has led to this higher profitability?
Okay. Any other follow-up questions, or would you want me to answer this first, please?
You can go ahead and answer this first.
Okay. So earlier in the conversation, what we talked about as the prime driver for this growth is, as part of our 3-year plan, we have been adding capacity. So the first capacity enhancement, large capacity enhancement that we did was by adding about 25 acres of yard capacity in JNPA in the flagship ATL facility. And the necessary approvals and everything had come in the beginning of the financial year, and we started operating that facility from mid-August. So that's a capacity addition of about 170,000 TEUs that we have done there. That is something which has helped us add volumes. The second is we had renewed our CWC Mundra license. This is an extension of the contract that we had. So last year, there was a point in time in which heading towards the renewal, there was a bit of slowness in volumes. Once the renewal happened and an additional 10 acres of facility has been granted to us in the renewal, we have been able to add capacity there too. These two locations, and I have taken you through the numbers, the incremental numbers between Q1 and Q3 that we have had on a monthly average basis is about 8,000 TEUs, out of which around 75 to 80% has come in from these two locations. Otherwise, the market has grown organically. There have been market growth even in the other markets that we operate, like Chennai and Dadri and Calcutta. The rest of the volumes have come in from there. In terms of operational leverage, wherever we have had volume growth in the existing facilities, like in JNPA where we have extended the yard, operational leverage starts to kick in because in terms of people, in terms of equipment, in terms of all the other support facilities which are required to keep the CFS running, you start to get the operational leverage. And that is what is starting to reflect in the EBITDA per TEU that we have been having. But this EBITDA per TEU strengthening is not only a phenomena based on the capacity addition. And over the last 6-7 quarters, through a combination of measures that we have taken, both on the revenue and the cost side, we have been able to slowly inch this EBITDA per TEU number up. And now the latest increases in the last couple of quarters, or in Q3 specifically, can be attributed to the operational leverage from the additional capacity that we have put up in JNPA. So whenever we add capacity, I think there is scope for operational leverage. And this comes from better utilization of the equipment that we have, better utilization of the people that we have at the facility, better utilization of the warehousing that we have in the facility, and that's how margins show upward trend.
Thank you. Thank you so much for such a detailed answer. As we are talking about capacity expansion, can you put some more light on the timeline of speedy JNPT facility, that 6,000 TEU capacity? What is the timeline that you are seeing?
Yeah, so thank you. So Speedy JNPT is an existing facility. It's a 20-year facility which has been operated by the Allcargo Group over the last 5-6 years. At the time of renewal, we have taken stock along with the experts in JNPA, and we have recommended that upgrade has to be facilitated for the yard and some of the warehouses. So once the upgrade of the yard is completed, which we expect to take about 3 to 4 months, we will be able to handle more containers in the yard, and that is expected to give us an additional capacity improvement of about 60,000 annually. And this is because portions of the yard are not in great shape now for us to stack multiple containers. We'll be able to do that post this upgrade, and that is how it's not as if we are getting additional area or something. It's because the quality of the yard becomes better. And then the warehouses that we operate in also needs a bit of refurbishment. Both this will enable the additional capacity. The timeline for this, I said we expect the finalization of the scope of work, everything to happen by March, and maybe another 3-4 months for completing the necessary work. So H2, definitely we will have the benefits of this upgradation. H2 of next year.
Yeah, I guess that was good enough for me. Just one last question from my side would be on the current scenario. As we are seeing, there are trade agreements with EU and US. So how do you think this is expected to increase our volumes moving forward? Would you like to share some points on this?
Yeah, I would like to share this saying that during the course of this year, we have had a bit of turbulence around different changes which have been happening. They have impacted volumes for the industry, and obviously that impact cascades down to an operator like us. In spite of all the things, current year volume, the Indian EXIM trade volume which comes into CFSs have grown at about 6-7%. with stability and clarity about some of these trade agreements and tariffs coming in, we expect sentiment to improve, more export to happen, and which is why in terms of growth of the industry, we have always said that it is in the range of 6 to 8%. So sometimes you fall a little down and get to around 5.5%, 6%, everything becoming better and no other instability on account of global shipping or any of those things, then it gets to about 8, 9%. So we are optimistic that with all the changes which have happened, we should see an uptick in growth. That is one. Second is the contribution from US and EU to the container volumes which come into the country, and that is estimated at about close to about 30-32% is the estimate that we have, at least through the facilities that we operate. So in that portion of the volume, one could see uptick. But you also know, and I'm sure that everybody is in the public domain, it's clear that the EU agreement in terms of becoming operational could take X number of months. So we are also waiting for all these procedural things to get done. And finally, I would like to say that the way in which we plan our businesses, there is a certain capacity that we have built for our business. There is a certain amount of cargo which is available. Customers need great quality service. We need to be operationally excellent and operationally efficient. By this, we attract cargo to us, and we try to keep ourselves a little away from some of these larger macro things which happen, even though there will be an impact of that on our business. So we are sharply focused on ensuring that we meet customer requirements with the capacity that we have, and with that, we have planned the growth for the coming year.
Thank you so much for such a detailed answer, sir. And we're really happy with the numbers. As you know, I can see that the quarterly and the 9-month figure are the best ever. So just all the best for the coming quarters, and we'll be in touch.
Thank you very much.
Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question comes from the line of Deepak Karwa, an individual investor. Please go ahead.
Hello. I'm audible?
Yes, you're audible, Deepak. Please carry on.
Congratulations for a good set of numbers, sir.
Thank you.
Sir, can you quantify the contribution from the JNPT capacity addition and the CWC Mundra contract renewable in Q3 volumes?
Yeah. I had shared this earlier in response to one of the questions that I got. I'm happy to share that again. So in Q1, our average monthly volumes, including Dadri, was about 56,000 TEUs per month. In Q3, we have grown that to around 64,000 TEUs a month, including our Dadri joint venture. So it's an increase of about 8,000 TEUs per month on an average, out of which about 80%, 75 to 80% has come in, equally divided between JNPT and Mundra.
Okay. Understood, sir. And sir, how should we think about the margins going forward in the new capacity ramp-ups, and what will be the EBITDA per TEU during the quarter?
Yeah, so in terms of margins, we have paid a lot of attention to growing margins over the last 2-3 financial years, and we are starting to see the benefits of that. Some of this takes a little time to actually put in. But over the last 6 quarters, if you were to see, the trajectory for EBITDA per TEU has constantly been on an upward trajectory. We have reached close to 2,400 levels, and we believe this is the right level to operate what we have, because we also need to be competitive in terms of pricing, and then there is competition, and there are other operators also in the market that we operate, and therefore we will be happy if we can maintain the current EBITDA levels. In terms of EBITDA growth in the coming quarters and months, whenever there is capacity addition, which could be in the form of additional capacity whenever we get into the Mundra project, which is some quarters away, or when we have Farrukhnagar, those are the times in which you will see step jumps in margins. And like we were answering in response to an earlier question, the Farrukhnagar facility is a rail-linked facility, and therefore there is a portion of rail margins which will come into the ATL operations. So we expect a significant jump around that time, but that clearly falls into April 27 onwards. So it's a good one financial year away. So we can talk about it closer to the launch of Faruknagar. As of now, the current levels we'll be happy to maintain, continuing to give best services to our customers and remaining competitive and increasing market shares wherever possible.
Okay. Understood. Sir, my last question, what will be the EBITDA per TEU during the quarter?
So you are talking about this current quarter?
Yeah, current quarter.
The current quarter EBITDA per TEU, which we have reported, is 2,412.
Okay. Understood, sir. Okay, sir. Thank you so much, and all the best for next quarter.
Thank you. Thank you very much.
Thank you. We have a follow-up question. It's from the line of Darshil Jhaveri with Crown Capital. Please go ahead.
Hello. Yeah, hi. Thank you for taking me again, sir. So just wanted to clarify one thing, kind of. So in terms of when we are adding, the capacity of, JNPT right now, which is a significant, addition, then why are we saying only 6 to 7% growth, right? Because for half of the year we didn't have JNPT with us. So ideally we should at least be able to grow around 13% at least, right? Because that itself will be available for the full year, right? So just wanted to, get your thoughts about that.
So, in terms of announcements and what we share in our earnings call, we do not want to kind of give a long-term guidance on the volumes. We would just like our track record to speak for itself, and that's the approach that we have been maintaining in all these calls over the past many quarters. So if you were to look at how volumes have picked up, I think that gives a very clear indication of the trajectory that we have. And basis our track record, I would kind of allow us to kind of give us the opportunity to update these numbers as we meet you in the coming quarters. As of now, I hold on to what what we had said earlier. There is a certain market growth that we anticipate, which is in the range of 6 to 8%. Our goal, aspiration, and our track record has been to grow slightly faster than the market wherever possible, keeping an eye on volumes, keeping an eye on EBITDA. And that approach is what we will continue to adopt, because that we believe will deliver a healthy business for all stakeholders.
Oh, okay, fair enough. Yeah, that was my only question. Thank you so much for all that.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Suresh Kumar for closing comments.
Thank you, and thank you to everyone for all your questions. Some of your questions make us also reflect and think a little more about the business that we are doing, and it helps us in terms of planning ahead. I wish to assure you that me and my team are completely committed to driving the trajectory of our business results in a positive direction in the coming quarters. The expansion that we have done in the past quarters is starting to bear fruit, and with the customer confidence which is there for Allcargo Terminals as a brand and for Allcargo Group overall, we expect to continue to maintain the momentum in the coming quarters. So thank you very much for your interest in Allcargo Terminals, and looking forward to talking to you during other interactions and the next quarter results. Thank you very much.
Thank you. On behalf of Allcargo Terminals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.